have a lot of you still have a hard time wrapping your heads around the key of this. So let's just see what we can do. All right. Okay, somebody asked if we can get the what's the journal. That's my personal journal now. Okay, so you should have a journal where you, that's how, I don't know how you guys study, but then if I was not, I don't think, I am very certain, 101% certain that I still spend much time on the charts than all of you guys here on the call. I can beat my chest to that. Yeah, you guys are taking too much time, too much rest, too much time off the chat. Okay, so that's my personal journal. And then the only way I can discover all of these things is by learning, by journaling. Okay, so I do a lot of learning, I do a lot of and journaling and studying transaction and asking too many questions to myself. So that's how you learn. However, I will send the picture, I'll send a photo of that, the screen grabbed photo of that stuff I just explained to the general group. So you can have a reference you can look up to when you look your chat, something you can try to mirror when you try to get a sample. Okay, so let's talk about internal liquidity and external liquidity. I see you guys, some of you still asking too many questions. Now, listen up, okay? What do you guys call this? What is it? Mute your mic if you're that person in a town hall meeting, please. I'm hearing. Okay. Please mute your mic if you are in a noisy environment. I do not have to tell you that.
This is a bullish structure or a grab of internal liquidity to external liquidity.
Thank you very much, Mr. Osi. Okay, so, okay, but then basically, prior to this time, you call this an uptrending pattern forming higher highs and higher low. Okay, it used to make so much sense. It used to make so much sense to say that higher high and higher low, higher high and higher. But at the moment, I sound very daft when I say that. Okay, I've higher high and higher. There's no atom of logic in that statement or in that higher high and higher low. Price is creating higher high and higher. Does it make sense? Does it even make sense? Okay, that's the problem. Okay, if you continue seeing this as higher high and higher low, your trading will be useless because everything price is concerned with in this range is to take out liquidity resting above this high and to come back to seek internal liquidity, first by virtue of fair value gaps or other blocks to be mitigated before this internal liquidity is what? Fuel. Okay, this fuel is what will drive price up to take out the external liquidity, right? And then after price has done all of this, because of the momentum price we used to go up, it will be short on fuel. It has to come back to grab new fuel from inside the range as internal liquidity, inefficiency of blocks to be mitigated or orders to be picked and all of that, and then comes back to clear out another external liquidity and then comes back into the range to grab internal liquidity. Okay, now let's see this on the chat. Okay, you guys are not babes. I don't need to. Let's see this on the chat. Okay, so we'll do a top-down approach from the 4-hour time frame. I've shared this with a few of you guys on the mentorship already this week. Those guys I had a call with this week. So this is a walkover, but then let's just leave it at that. Okay, so yeah, so this is our area of what's demand, right? And 15 minutes. So let's play with this price action, right? Let's play with this price action. This is a break of structure to grab external.
Oh, this is your 5 minutes, not your 15.
Okay, sorry. Thank you. Okay, so we are taking this high as external liquidity, right? And then we had come back for a fair value gap. If you still have your 1 minute time frame that can still fit this range, okay? I'm not using a subscribe trading view because I think for some reason it is quite irrelevant for me at the time. Okay, so if you can go back to your 1 minute time frame and then look at this, you definitely see this fair value gap. because I traded this and then I saw it. Okay, so there's an inefficiency inside of this range. The price actually came to fill. Okay, so we had this as a grab of internal liquidity. After taking this external, we rallied back to internal. Where's the next target? And I have sent this as well. I sent this as well to, let me make that reference very quick. New share Telegram. Okay, where's the academy group? Okay, so it doesn't look like I'm sharing too many stories. And I still remember at the time, right? Okay, so I marked this one as internal liquidity. Great. So this is that area I was marking. The area I just marked now. I have to check on your 1 minute time frame. Okay, this is that week inside of this range. And what did I write here? Possible what? What did I write? Possible target, external liquidity. Right? Okay, because we had grabbed this here as external, and then expecting price to take this as internal range. Though we still came lower into this area to grab this particular one. And then what did we do again? We went for the target. Okay, so new share back to the chart. And then let's see that. Brave browser. Which of the browsers was I using this time? Cool, okay. All right, so we came back to take this high as the external target. And yes, we took that as external target. Okay, after taking that as external target, what did we do? We came back for the internal target. What is the next internal? Right, still inside of this range. Hence, I was concerned with taking this high as my next external target. However, I had introduced the concept of a threat zone. What is a threat zone? For those of you guys that have talked that, I've explained that to. What is a threat zone? What is a threat zone? What is a threat zone? Somebody answering.
So how we can expect a reversal?
Okay, everybody, we can expect a reversal in price. Okay, how do we know we can expect a reversal in price at that point? Because the same characteristics you have that you saw your buy entry. Why did I buy here? We had a nice grab on liquidity and we have shifted structure. So why should I consider a sell here? We have also grabbed liquidity and then we have shifted structure. Okay, so all of this here is a possible threat zone that price could be playing from. Okay, so I'll be careful inside of this range. Should have taken partial and broken even on my first entry or my first position. Then I will now be concerned about the price play inside of this range. Okay, so let's drop down to the 1 minute time frame so we can see better details of the story inside of this area. And then all what we are trying to see is the delivery of internal to external or of external to internal, right? The only time price will deliver internal to internal is when we are having a change of trend. The only time price will deliver internal to internal or external to external is when we are having a change of trend. Okay, so we had grabbed internal range liquidity at this point, and then we came back to this high to grab another internal range liquidity. Okay, so let's look out for the target areas for internal range. Okay, what am I looking out for? I'm looking out for fair value gaps or inefficiencies, right? So personally, I'll be concerned about, where do I have my first one? I'm looking out for the first one. I'm looking out for the first one. All right, this. Okay, so this high, right? So this guy was not properly tapped into. You can see that, right? So we have this area first. So I'll be concerned about this area. And then I'll also be concerned about this area as well, right? Okay, so let's mark this first to the left. Horizontal ray, this, and horizontal ray, that. Okay, so what do we have price come to do? Nice, okay. So let's delete this one and work with the one who gave us the reaction. Okay, so price had tapped into that area and then giving us a new story as a grab on liquidity. I can take this out now, right? And shift in momentum, right? And then one of you guys actually took this trade off this high. Okay, and then had this entry here. Personally, and sincerely, I'll be waiting for this high to be readed. Okay, I'll be waiting for this high to get readed, but then that did not happen. But then regardless, price gave us a story it was now willing to deal with, okay? So I'll be looking for this area to be taken, but that did not happen. However, we had a new range to deal with. Why did we have a new range? We now had this low taken, right? If this low is taken, then I'm now concerned also with what? With these highs internally, right? Why am I concerned with this high? Because this is the shift in momentum. The second wave is the break of structure. So wave 1, 2, 3. Okay, I'll mark that out. Wave 1, 2, 3. Right? Who is the wave responsible for the break of structure? This guy. Right? So we had this, this, and then this. So I'm expecting to see some sort of liquidity grab above these highs. Okay. So then I can now be willing to now deal from this point. Okay. And then stop losses protecting this high at 4.7p. Right? Does that make sense? Okay, so let's trace the story again. We're talking about delivery of liquidity from internal to external and from external to internal. And then we'll try to add out every other concept that is present here. I've done this back test with a few of you already, so it's just like some kind of refreshing what you know already. So we have grabbed this high as internal liquidity. What is the next target? To take out what? External liquidity. We have taken out external. What is the next target? Internal. Internal liquidity represented as what? Fair value gap. So where's the fair value gap here? So first point of contact is this range inside of this area, right? However, you choose to mark your fair value gap. Personally, I'll be coming in from this high. Okay, and then the entry stop loss where from here to now protect these highs on a 9.4 pip SL. That's if I couldn't get in on this, or if I actually need a re-entry. Okay, so let's just take out this risk to reward tools. They're irrelevant at the time. Okay, so we had grabbed external to internal, and then we had grabbed what's external, right? So where's my next point of internal I'll be concerned about? Next point of internal will be this last high to inefficiency. Right? You can see this, right? Last high before this inefficiency, price came nicely to grab into that and then drop. Okay, now this is where the magic is. Price failed. Okay, now look at what happened here. We have price come back, tap into this range, and then grab this high as inefficiency, right? It means that automatically this low becomes what? External liquidity, right? Where's the new internal liquidity? This range, right? Before inefficiency, tap right in, and then came back to grab what? External liquidity. I can go on and on and on and on regardless with respect to whatever price showed me. Now we are reacting bullish, right? We have a bullish reaction from this point. Let's see why we had that bullish reaction from that point. Tracing the stories on your left as it regards trade zones. Okay, trade zones. What do we have here? We have a grab on liquidity. We have a break of structure, right? So it means grab on liquidity, shift in momentum, right? Sorry, and then a break of structure. Okay, so it means this lows, we are actually responsible for the shift because this is my wave 1, wave 2, wave 3. Okay, so below my wave 2 has juice. Okay, price came there to grab the juice below wave 2 and then gave me some kind of liquidity, gave me some kind of a reaction, right? So we had grabbed this as external. If we had grabbed this as external liquidity, then it means we could begin to see some certain level of bullishness. So if this is a grab of external liquidity, now not forget something. Okay, let me not go too fast. This is a bullish leg, right? Please, somebody talk to me. This is a bullish leg, right?
Yes, sir.
So with regards to this bullish leg, it means that we could see price come here to grab this as internal liquidity and then head for this, right? Because we have this here as a break of structure. True or false?
True, sir.
True.
Okay, nice. So if this is the bullish story that is still in place, then it means that after grabbing liquidity from this low, it only makes sense that price violates this high as target liquidity. True or false?
True,
Now,
sir.
as soon as price target this highest target, as price takes this highest target liquidity, it will now make sense to now begin to look for your sellers from here as your next point of internal liquidity. Your buyers, rather. Why is that? Another trade zone. Why? Does that make sense?
Yes,
Am I
it
the only
does.
one seeing? Am I the only one seeing?
Yes, so
Okay, good.
I've seen what you marked.
Great, great. Okay. So price came there and then gave us very amazing reaction. Okay. So at this point, Dr. Bank should have been break even here or here. Okay. So price gave us enough chance to play around, right? Even gave space for re-entry in case you couldn't get in initially from this area. And then for some of us would have tried to attempt a buy from this point. So with respect to the order flow, you are not wrong if you try to buy from this point. Okay. But then you will be wrong if you did not break even after you cleared this high. All right, so let's take out that. And then we had that zone fill. Why did the zone fill? Why did this zone fill? Let's trace that very fast. Somebody give me an answer. Why did the zone fill?
It has double bottom liquidity beneath.
Exactly, exactly. So we have draw on liquidity. This double bottom here is a draw. Always be conscious of your surrounding. Okay, so we have a draw of liquidity that is opposed, that opposes the initial story we are playing with for the day. Okay, let's look for London. All right, this is already in London. This is already in New York. Okay, this draw on liquidity opposes the story that we are playing with already in New York. Okay, so it has to be taken out. Okay, so price tried to give us reasons. Okay, because certainly if we are going to buy from this area, the order flow is in our favor. The order flow says buy. Okay, so I personally have been in this buy until this zone gets taken out. So I'll get stopped out on this trade at break even. Obviously, I'll get taken out at break even. Okay, so let's continue with the story. Let's take out this line. And then we're only trying to mark out delivery of liquidity from internal to external and from external to internal, right? Nice. So what did we do next? We took out this low, right? We've taken the liquidity now as external liquidity. What did price do? Went back into the range to seek this breaker block. Now, okay, somebody asked a question about breaker block, right? So this is the breaker block here. This guy here is the breaker block. Okay, because it is the last point of sale before this buy move that broke structure. This last point of sale here is the breaker block. Okay, it is the closest thing to resistance broken turn support or support broken turn resistance. Okay, so that's the closest thing to that on the trade, the SMC. Okay, so price came back to tap into this breaker block. Now the idea is that we have escaped this area aggressively. It means that this buy move that we used to clear this high would be in a loss. So they have to come back to this point to mitigate this buy move, right? This buy move, and then close this buy move on some kind of partial before continuing with the initial trend that has the momentum. Okay, so we have come back to tap into that as internal liquidity and then continue now to take the low as external. And so on and so forth and so on and so forth. Now we have a new buy. Why do we have this buy? Let's trace that. Another flip zone. Another flip zone. Okay, this right. So before we get there, let's trace the story on the left. Right, so we have this as a grab on liquidity, shift in momentum, and then the second leg is the break of structure, and then had juice resting inside of it. Price came back, right? So this was a nice RUTO to the perfect break of structure that we wanted, right? So anybody who saw this at the time will be looking to now take new sellers from inside of the internal range or the breaker block or anything you want to use, or yes, this extreme, because that's what price, that was the closest to price. We didn't have any internal liquidity here to take, or except you wanted to play from this area. Okay, if I was going to play from this area, I would still have my SL covering this high. Okay, so price came to that point, tapped this area, and then gave us signs of bearishness that we are going to go down. But then aggressively left the area. Can you see that? Aggressively left the area. So we failed this area of supply. As soon as we fail this area of supply broken transfers power to the demand that failed it. Okay, hence we have these guys in play. Okay, these guys inside of here. Right? So price came back to the left and then tapped into that range, okay? Mitigated this one properly. Okay, as a new flip zone, right? Then we had a push out of the area and then price came back to give us a new confirmation entry below all of this, right? And then, or just using the block, whatever I choose to mark. And then we have this move to the upside. Okay, does that make sense? Now, when price aggressively escaped this area, I will first be concerned about what? These breaker blocks before the extreme. Okay, these breaker blocks before the extreme. Okay, because it's possible we can come grab liquidity below this low, tap into this fair value gap, and then move. Okay, which was exactly what happened with the story on the left. Right, so we just came nicely to tap into this breaker block that was supposed to be the confirmation entry of this buy move that had started from this flip zone. Okay, so now I can take this guy out and I can take this, right? I can take this guy out. Okay, so we have a flip zone scenario here, well mitigated and moved. Aggressively escape the area. First point of contact is the breaker block before considering the extreme. So price came nicely, tapped on the breaker block, and then gave us our desired move to the upside. Okay, does that make sense? Let's see how we would have gotten some certain form of the entries of that range. Nice. Okay. So we had grabbed this place as the external liquidity. Okay, so if this bullish move will continue, after grabbing external liquidity, don't forget we are now reacting off demand. We are now reacting off demand. So if the bullish move will continue, after grabbing this as external liquidity, we are looking for the internal liquidity, right? And then personally for me, my first point of contact would be the guy that sponsored this break of structure. So I'll first be concerned about, I'll be looking forward to seeing price changes below this area, okay? Nice, okay, so we have tapped into that area and then moved across to clear this. Personally, I would have been in this trade and I would have been stopped out on a stop loss, okay? I would have entered this trade and stop loss below this low. And yes, obviously I would have been taken out because this just makes sense. This just makes sense as a shift in momentum and as a break of structure. So I'd have been, this trap would have held my legs. So personally, I'd have been inside of this range. And then got stopped out on a stop loss and then look out for the next target point to enter from. Now, how would I have re-entered off this buy move? Let's trace the story. Let's trace the story very fast, very fast, very fast. So yes, we have a grab on liquidity to the left, right? And we have a break of structure to the right, right? So it only makes sense that price could come into this range to give us some sort of sell pressure. So once this fails me, rather, I'll be looking forward to now continuing my sell from this point. Okay, so I'll be waiting for a confirmation to come into this area because I need to see at least something that gives me an extra motive, right? So I didn't get any confirmation here and we left that area aggressively. As soon as we violate this area, I will now be looking to trade inside of this range. Now, looking at the screen, okay? Why do you think we sold from this area? We bought rather from this area. Let me remove this line. I had just explained this to you not quite long ago. When you aggressively escape an area you are supposed to be trading from as a dealing range, and then you leave this huge fair value gap, you're looking for this. Personally, I'll be looking for this. Let me see, did we get filled in? Did we get filled in? No, that was a narrow escape. Okay, so personally, I'll be looking to trade off this. I was expecting price to come back into the range and then tap into these areas and then buy. Okay, that failed to happen. Now, did we still have an entry? Yes. Okay, the story gave us a confirmation as grab, shifts, right? So there was a high tendency to get a return, a root fill into this area. Where's that guy? Does that make sense? So I didn't get tapped in on my entry if I was using a pending order, but as it regards the price action now present on the screen, I can now see a new grab on liquidity, a new shift in structure to tell me that price is now interested in escaping the area. Then I can now be willing to trade off anywhere inside of this range. Does that make sense? Obviously, I'll be protecting because I'm human. I'm not a robot, okay? And then I have emotions, I have all of that. So I'll be protecting this low. How many pips? 3.0, I'll be using it 5 pips. I'll be using it 5 pips. Just in case. Sincerely, I'll be using it 5 pips for this move, or 4. 4 just makes sense because 4 had covered this inefficiency already, right? Yeah, so 4 pips will be good. And then targeting these highs as first target of external liquidity. Okay, so once we do that, then I can now look to still higher prices and then probably take partials at 5 hour. Yes, so partials taking at this point, and then new liquidity taking. Okay, so you must understand the fractal nature of price and the fractal nature of liquidity if you want to be dealing on the 1 minute time frame. Okay, if you want to deal on the 1 minute time frame. Now observe what happened. As soon as we grab external liquidity, what did we come back for? Internal liquidity, right? Internal liquidity. Now, why did we have to go below this? Somebody give me an answer. Fast. Why did we have to go below this? If this is supposed to be protected, why did we have to go below this? Let me delete this. Am I talking here alone?
No.
There's a double bottom. There's a double bottom there.
Nah, not the double bottom. There's
No.
something I want to hear.
Go below what? Which one?
Why did we have to go below this week?
If you look below, there's that's see that week there, and that's so I would assume that and there's an inefficiency right before that. So
Nah,
Okay, so for me, I feel the only liquidity that needs to take out is below that low. There's no liquidity before it. That's why I took it out.
that's still part of it. But then I want you guys to be able to put this into very simple logics, okay? I talked to you guys about understanding the first wave and the second wave, okay? If the first wave comes to shift momentum, the second wave comes to what? Break structure. Your liquidity actually, your basic liquidity actually rests below the second wave. So first wave, shift momentum. Second wave, break structure. So who broke the structure? Who sponsored the break of structure? This guy.
that one.
Okay, your first wave is your shift in momentum to indicate signs of bullishness. Your second wave is your break of structure. So this is 1, 2. The low of this area has your liquidity. I explained that prior to this time, right? Which would have been one of the reasons why I would definitely had extended my stop loss when I was talking here, right? And I said I would definitely extend my stop loss to cover these areas because obviously we had reasons, we had room, we had enough room for price to come back lower into these areas. Okay, so even if I was not break even on this trade, I would still be in the main move when all of that happens, when all the magic finally happens. Does that make sense? Okay, So if I get stopped out, I still have a chance to come in back to play with whatever happens. Okay, we had aggressively escaped this area. Price came back to. I traded this. I remember this move. Quite well. When was this? Thursday, 17th November. I remember this move quite well. Okay, so after grabbing external liquidity, we came back to take internal liquidity like we should, and then continue to grab what? External. Came back for what? Internal by virtue of breaker block, and then continue to grab what? External. Came back again for internal by virtue of what? Inefficiency, and then still refusing to tap into. Mr. Osi, I think we had a call at the time, right?
Yes.
Yeah, we had a call. We had a call this morning on this particular day, and there was a certain build up I was talking about that I wanted price to clear. Right, it was all of this build up here. Right, it was inside of this range. Exactly. Remember that, right?
Mhm.
Yeah, I told the price will come back to clear this range. Right?
Yes.
Yes. I remember that. I remember that clearly now. Okay, so we have come back down to tap into this range, and then still not mitigating your order blocks. Okay, because price is not interested in your order block. Have that at the back of your mind whenever you trade. Okay, price only needs liquidity to move, and then tap into liquidity, right? And then came back to clear what? External liquidity. Now, by virtue of clearing external liquidity, we had also cleared a previous daily high. Which is major liquidity. Because it is major liquidity and it is a PDH, automatically it only makes sense to now expect bearish move. Yeah, Oga Peter, you have a question.
This place, you said Chukwu is not interested in our order block,
Yes.
but don't you think you have been using it as your, like, as this place as liquidity?
Why should I use that place as liquidity? A range that price has escaped. Price has already tapped this as a breaker block. When I say order blocks, I'm talking about, okay, sorry. When I say order blocks, I'm talking about your extremes. Okay, when I say order blocks, I'm referring to your extremes. Okay, those of you who refine order blocks on 1 minute and all of that to this point. That's what I mean when I say order blocks. Clear your annotation. Call the price point so I can mark it. You're talking about this place. Hello?
No. Yeah. I'm talking about here. Yes, that place.
Okay. Now, look at what price did with your order block. Is this the move you want to be trading?
No, I'm talking about
as liquidity. As liquidity.
After taking external, talking about returning the I say I'm saying that instead of breakout block, why not breakout block?
Price will never come to your origin if it aggressively escapes your area. This is an aggressive escape out of your area, so don't bother about your origin. I say that oftentimes. If price aggressively escapes your area, it would not come back to the origin, especially if we have a breaker block present. Does that make sense?
Yes.
Okay.
Yes.
If price aggressively escapes your area, don't expect it to come back to your origin because the closest point of impact is your breaker block. Okay. So as soon as we grab this area of major liquidity, we are now willing to now see bearishness. Okay. So for some of you who needed extra confidence to come into this trade and could not come in at this high, okay, I have lots of friends who took the sellers from here. I was not trading at this particular day because I had a few things to do, so I was off the chat. We had a reconfirmation at your breaker block, and then price continued to go bearish. Okay, Peter, please clean this your gold-plated line you have on my screen. Thank you. Okay, any other questions? I just have 4 minutes more and we're done for the night. So you should go back on your chart and study. Study the delivery of liquidity. You'll thank yourself. Okay, study the delivery of liquidity. You'll thank yourself. All
Okay,
right.
sorry to sound like a broken record, but I have that question. I just want to ask again.
Yeah.
So if there is no imbalance below or above the liquidity, price is not going to.
If there is no imbalance,
that's not
if there's no imbalance below or above the liquidity, you have to be. That's why I don't trade rules. I trade systems. Systems are flexible. Rules are not flexible. Okay, so always know when to apply what. Okay, because market is not going to give us exactly the same situation to trade with. Okay, so always know when to apply what. If there's no imbalance and there is no breakup block, whatever, what do I choose? I'm yet to see such a scenario, but I think when that time comes.
Give me your chart.
I'm hearing too much noise on my background.
Mr. Jai.
All right, any question, last questions? I have just 3 minutes before we go. Last questions. Last question.
Hello, sir. Can you hear me?
So will you also say that the reason why the market returns to that breakout block is because of the aggressive break of structure below?
It was the only
right?
relevant. It was the only relevant point of contact. It was the only relevant point of contact. Everything inside of this range has been mitigated. Everything.
Okay.
Any other question? Two more minutes. Any questions? Somebody else was trying to talk before you spoke up. No more questions. We all good?
Can you hear me?
I can hear you.
Sorry, I'm just coming in now. I just want to know your market expectation.
I had done all of that already. I'll send the video to the group shortly.
Okay.
Yeah, that's the first thing we did. Right. So guys, I hope we made sense. Any questions?
Absolutely did. Thank you.
All right, guys. So I wish you all an amazing week and lots of peace and lots of profits. See you guys in London.
Same.
All right, guys.
Amen.
Emmanuel, leave my call. Cheers, man. Cheers. All right, guys. Talk to you guys later.